And now shifting focus, gold is glittering again, up more than 50% this year. Now investors and central banks are rushing to buy as global tensions and inflation fears rise. So from trading floors in London to futures market in New York, this is the story of 2025's gold rush. So the question is, what's driving this new gold rush? Let's get you more in this report.
The price of bullion, which typically performs well when interest rates are low, has risen by more than 50% in 2025. Investors are flocking to buy it. But what's driving the latest gold rush? Rising interest from investment funds has been a major factor behind bullion's price moves. Sentiments driven by market trends, news and global events can fuel speculative buying or selling of gold. Gold is considered a safe haven, which investors seek out at times of increasing global uncertainty. And there's no shortage of that right now, according to Veronica Brown, Reuters global industry editor for metals and mining.
I think an awful lot of what we're seeing is about fear right now. If you think about gold as a mirror onto the rest of the world, you could really describe it as being the sum of all fears, whether they be geopolitical or economic.
US President Donald Trump's trade tariffs and additional hikes on Chinese imports have sparked a global trade war, with China slapping further tariff increases on US goods. It's rattled currency markets and sparked fears of a spike in US inflation. Global central banks' policy decisions also influence gold's trajectory, with lower interest rates reducing the opportunity cost of holding gold since it pays no interest.
You can feel there's a lot of angst around what the trajectory is for the dollar, what's going on with interest rates, the impact of tariffs, higher prices that will lead to inflation, and that makes the task of central banks when they're trying to balance inflation risks against interest rates particularly hard.
These central banks also hold gold in their reserves, and recent demand has been robust because of the economic and political uncertainty. The World Gold Council says more central banks plan to add to their reserves within a year, despite high prices for the metal. Alongside simply purchasing physical bars and coins, there are other ways to invest in gold. Large buyers and institutional investors usually buy gold from big banks. Prices in the spot market are determined by real-time supply and demand dynamics. London's the most influential hub for this market, largely due to the London Bullion Market Association. The body sets standards and frameworks for trading among banks, dealers and institutions. Investors can also get exposure to gold via future exchanges. That's where people buy or sell a particular commodity at a fixed price on a particular date in the future. COMEX, part of the New York Mercantile Exchange, is the largest gold futures market in terms of trading volumes. China and Japan are also big players in the gold futures market. Exchange-traded products or exchange-traded funds issue securities backed by physical metal. It allows people to gain exposure to gold prices without taking delivery of the metal itself. Exchange-traded funds have become a major category of investment demand for the precious metal.